Draghi says he's ready to buy bonds. Sources tell Reuters the ECB will buy heavily when it does, and the Bundesbank will be on board. Eurozone bond markets ending the week on a strong note. I'm Jamie McGeever, and this is today's Market Pulse. Well, let's get straight out now to Richard Maguire, Senior Fixed Income Strategist at Rabobank. Richard, another Reuters exclusive seems to be moving the market today. Spain back below 5.8%.
Yes, the market has been supported, as you say, by the headlines carried by Reuters that the ECB would intervene heavily in a bond market once assistance had been requested under the OMT programme. They would do that for 1 to 2 months, and then they would take stock to see whether additional purchases would be necessary. But it's certainly the emphasis on heavily, which is supported market sentiment. And the fact that the Bundesbank would take part, irrespective of its opposition, also has served to support peripherals this morning.
If this had been a few months ago, maybe the market's focus might have been on the fact that the ECB was showing its hand and taking away maybe an element of surprise in telling the market how it's going to do its bond buying. But now bonds are rallying. There's a clear shift in sentiment, isn't there?
There has been. There's really been an ongoing shift in sentiment since the middle of this year, in fact, and certainly that gathered considerable steam at the end of July when Draghi said that he would do whatever is necessary to shore up the periphery. Then on the September 6 ECB meeting, we saw the details of the OMT programme that further supported peripherals, and now we're getting additional positive headlines, which is further seeing demand for peripheral paper. But the fact of the matter is, we're still left with this standoff. The ECB is ready to support peripheral markets, but as Draghi made very clear yesterday, the ball is in government's courts now. They need to ask for such assistance, and as we saw from the Spanish economy minister de Guindos yesterday, he said that a Spanish bailout is actually not necessary. They will not ask for one. So the question is, will we continue to travel in hope from here? Will the promise of OMT support continue to buoy the peripheral markets, or is it the provision of assistance that is necessary?
There's an interesting piece in today's Wall Street Journal that any help or any benefit that Spain gets from this programme is not going to translate into, it's not going to equate to the same kind of benefit for Italy. Is the obvious trade here buy Spain, sell Italy, or is that trade overcrowded?
Well, I think near term, I would favour selling Spain versus Italy simply because Spain has made it very clear that it does not want to ask for a bailout. Therefore, if it is to ask for a bailout, it needs to come under market pressure. It needs to be strong-armed in asking for assistance. I think as time progresses, then the bailout premium will be priced out of the Spanish curve, and Spanish yields will come under pressure commensurately. So I think for choice in the coming weeks, we would look for a steeper Spanish curve, a bare steepening of the Spanish curve, and an underperformance of Spanish 10-year as it is pushed towards a bailout, an underperformance relative to Italy. Once it does ask for a bailout, though, we would agree with the Wall Street Journal. We think that Italy is the next man standing. It is the next stepping stone as the market pushes further and further towards de facto fiscal unity within the Eurozone. As Italy comes into the frame, that is the time when you would buy Spain, which will have asked for a bailout, and sell Italy.
OK. What about Portugal and Ireland? Both have come back to the market. Portugal this week with a bond swap. Are you getting strong interest from your clients on buying Portugal and Irish bonds?
We are certainly seeing some interest from some of our clients and continued interest on the part of some who've been optimistic on the Portuguese and Irish fronts for some time. As you say, Portugal this week swapped one of its bonds. It is also reportedly looking for private placements in order to meet some funding needs. So it is tiptoeing back towards the market, as it were. The ECB said yesterday that the OMT would not apply to Portugal because it does not have access to the market at the moment. But then, of course, the ESM does stand ready. And one of the mechanisms which the ESM will employ is to purchase the debt of those markets that have been bailed out, or those sovereigns that have been bailed out and do wish to return to the market. So there is room for optimism, certainly, on the Portuguese front. The two risks, though, for Portugal are public unrest. Recently, we've seen growing strains within Portuguese society and an increasing amount of demonstrations. That's one risk. And the second risk, of course, is that Portugal's fortunes are tied towards those of the broader Eurozone. Should the growth outlook continue to deteriorate in the Eurozone, then it feeds through into Portugal's macroeconomic outlook, which, as it continues to weaken, they will further miss their fiscal targets, which further delays an eventual return to the market and increases the risk they may ask for a bailout extension. OK,
just to finish up, Richard, what's your trade for next week? Is it that one that you said earlier, sell Spain, buy Italian bonds?
Certainly, that's a possible trade. That's something that I think will pan out over the coming weeks. Meanwhile, we are playing a very sort of a risk-averse version of risk-off. We are short Dutch 10-year versus Germany, simply on the notion that risk-off should build from here as Spain is pressured into the arms of a bailout, and that should see some modest widening of that spread. Richard, thanks very much, and have a great weekend. That was Rabobank's Richard Maguire. That's all from us for now, but stay with Reuters for all the big stories, including full analysis of today's US employment report. And we'll be back every day next week at the same time, 12 noon BST, to take the pulse of the market. I'm Jamie McGeever. This is Reuters.